Crypto markets' rocky ride continued over the weekend, and we are asking why. Welcome to the Daily Forkast, January 24th, 2022. I'm Megha Chaddah of Forkast News, covering all things blockchain. Crypto's poor start to the year got even worse over the weekend, with the total market cap falling by as much as 24%. We'll take a look at the market action and a whole lot more coming right up. Let's get you up to speed from Asia to the world. Let's kick off with some of the top stories out of Asia today. First up, in a sign of how mainstream crypto is becoming, South Korea's Statistics Bureau, or KOSTAT, is to include virtual assets in its annual survey of household finances. 20,000 sample households will be asked to reveal the total amount of crypto they hold as a part of the survey, which is carried out to understand the general economic living standards in Korea. However, KOSTAT says the results will not be revealed publicly, as the country has not yet determined whether crypto is a financial asset. And interest in crypto is booming in Korea, with the country's largest crypto exchange, Upbit, seeing a six-fold increase in its number of users over the course of 2021. And over in China, ECNY plans are heating up, with the digital currency arm of the central bank recruiting. Around 70% of the 132 positions on offer are technical, including mobile application architects, development engineers, and technical managers. The ECNY, which is touted as the most advanced digital currency to be launched by a major economy, has already been piloted in 10 cities, with the fast approaching Winter Olympics seen as a potential showcase. Now, more cities are expected to join pilots in the coming year after the digital yuan's historical transaction volume reached almost 88 billion yuan, or around $11.2 billion in 2021. You can find those stories and lots more at Forkast.news. Over in the markets, the weekend was not pretty. However, the total market cap had recovered slightly by Monday morning Asia time to sit at $1.6 trillion. Forkast News' Lachlan Keller has more.
Market leader Bitcoin plunged more than 20%, hitting a low of $34,349, but was trading back at just over the $35,000 mark Monday morning Asia time. One expert told Forkast News that with the Fed raising rates and unabated inflation, people are expecting risk assets to go down and that there may be a bit more pain to go through.
We might be in the process of bottoming right now, which is we still have to go down a little bit, but probably not a crazy amount still. We're already in the mid 30Ks, maybe the lower 30Ks, maybe even the upper 20Ks are, like a possibility. But then I think that will be an okay place to be a buyer again.
Jonathan says a lot of investors will be keeping watch on this week's Fed meeting for clarity. And while Jonathan Miller of Kraken agrees that macro uncertainty has hit crypto, he remains optimistic.
There's been volatility in the markets around some of the underlying layer one coins, but the growth of the space, the pie is increasing in size so rapidly, and we're seeing growth in so many different directions that aren't necessarily captured by that underlying price signal.
Miller says that includes an explosion in the total value locked into DeFi, and though the hype over NFT profile pics might fade, he sees huge potential in the space.
The principle of using crypto to create novel ways of doing business on the internet and better ways of doing business on the internet means that the space will continue to grow, and I'm really excited about NFTs in 2022.
For Forkast News, I'm Lachlan Keller.
Just a few years ago, many family offices were still wondering if cryptocurrencies were a real asset. But according to Camden Research's recent Global Family Office report, more than half of family offices in the Asia-Pacific region now see cryptocurrencies as a promising investment. But do they really believe digital assets like cryptocurrencies and NFTs are here to stay? Who better to ask than Henry Chong, CEO of Fusang. Fusang aims to reshape investment markets with blockchain technology. Great to have you with us, Henry.
Always great to be here.
Henry, so why are family offices in Asia so keen on crypto and digital assets?
I think the answer is because, at least here in Asia, a lot of families are much younger than in the West, in the sense of the people running the family offices are still in the first or second generation, and they very clearly remember what it's like to themselves be disruptors, to enter an industry, come up with a radically new solution to an old problem, and win the industry by doing so. Almost by definition, that's how they got to where they are today. They couldn't have done that if they weren't willing to be innovators and disruptors. And so I think when they look at a technology like blockchain, when they start to explore things like security tokens, they see the same patterns starting to emerge, and that's why they've jumped into this entire industry.
Right, so based on your experience in the industry, what are the potential pitfalls family offices should be looking out for when investing in these new asset classes? And on the other end of the spectrum, how should digital players be positioning themselves as an investable asset class?
I would counsel family offices to think about, when they look at the digital asset space, to think from their own experience, to say, well, again, a lot of them own and operate businesses. What are the challenges that you actually see in your businesses, and how might you use emerging technologies and business models to try and solve that? It's very tempting, of course, to enter a market and just purely speculate, and plenty of people obviously do in the cryptocurrency markets. But I think as we evolve, as we move into what I call crypto 2.0, I hope it will be that people start to look at what are the base use cases, right? How can I actually use this to transform my own businesses? And again, a lot of families own and operate businesses in Asia, and that actually is where I see the most interest in terms of blockchain technology. How can I use it for my business? And how can I also use it to actually digitize my own company's capital structure? Use things like security tokens to turn some of my stakeholders into shareholders.
And finally, what barriers do you think remain in place preventing full-scale adoption of digital securities in the family office space?
I think the answer is that, well, twofold. One is sometimes family offices look at the cryptocurrency and digital asset industry and they say it's all very exciting, it's also a bit scary. I don't know what service providers or counterparties to interact with. That canon will change. There will be more and more fully licensed and regulated platforms like Fusang emerging that I think institutions will be comfortable dealing with and that are used to dealing with institutional workflows. But I think really the second and the much bigger barrier to mass institutional adoption is regulated assets. As much as platforms are important, you always need to look at what is the underlying token, right? What does that represent? What are you trading? What are you really getting exactly? And I'll be honest, I think a lot of families look at the crypto space, they look at CoinMarketCap and they say, look, some things are fascinating like Bitcoin and Ethereum, but when you go down the list, it very quickly starts to be a bit more adventurous, let's call it. And I think that's really what they're waiting for. Where are the high quality tokenized regulated assets? I'm also very excited that yes, we recently were able to announce the Fusang IPO. We hope that this is just the first of many kind of people coming in doing these kinds of fully regulated issuances.
Well, tokenizing the world one step at a time. Henry Chong of Fusang, thanks so much for joining us today. And that's the Daily Forkast from our vantage point right here in Asia. Hit like, hit subscribe, appreciate it always. Help us reach our goal to reach more of you. For more, visit Forkast.news. I'm Megha Chaddah. Until next time.